All right, happy Sunday, everybody. It's Trendy John here from Simpler Trading. It is April 21st, 2024. Good afternoon. First things first, this week, do not forget, make sure you sign up immediately. It is a free webinar that's coming to you 7 Central on Wednesday, April the 24th. And what is really important about this, we'll be highlighting how Melissa has grown her account for the fifth time. That's right, fifth time, and she has doubled it already in 2024. And she is going to talk to you about how she used the Trendy methodology to do so. Now, more exciting than that, it's a free webinar and you get to hang out with us, but the fact that we are going to be building a challenge off of this. Now, I didn't want to, come out here and say, "Hey guys, let's turn a $10,000 account into 50,000 or anything goofy like that." I just want to say, "Hey, if you are interested in doing this challenge with Melissa, who has grown her account 5 times since using the Trendy methodology and has already doubled it this year, then you won't want to miss out. This is going to be a trial period where you're just hanging out with us. We're going to teach you all the tools and tricks that we do, and you get to follow along during the challenge. Okay, so again, very exciting. This is the URL if you want. It's very straightforward. It can also be found on my X account, my Twitter account, but it's just simplertrading.com/trendy, TR3NDY /trial. All right. And then all you got to do is fill your information in here. That's going to give you that free seat come this Wednesday, and you get to, again, hang out. Listen to us. We're going to go over trade plans, different kind of things that she's taken, and what's helped her to get that edge in the market. All right. So I can't wait to see you there. Go ahead and like this video so we can get into the rest of the broad market analysis. So again, thank you so much for hitting that like button. I appreciate you. Let's go ahead and minimize this. First things first, we're going to pull down the broad market analysis. So if you're already here in the room, don't forget, go over to the notes section. You guys have all these different things that you can look at, but the most important is going to be this right here, BMA, which stands for broad market analysis for 4/21/24 into this Friday, which is the 26th. First thing, this week's major U.S. economic reports and Fed speakers. Monday, so far, not much is scheduled, or none is scheduled, but be aware that any catalyst can come into the market. Tuesday, April 23rd, S&P Flash U.S. Services PMI, U.S. Manufacturing PMI, new home sales. All these times over here are Eastern. On Wednesday, durable good orders, you can see that's coming in at 8:30 Eastern. And then on Thursday, GDP, initial jobless claims, advanced U.S. trade balance in goods, advanced retail inventories, wholesale inventories, and then pending home sales. So Thursday so far being the busiest of the week. Friday, personal income, PCE year over year, core PCE year over year, consumer sentiment. So Thursday and Friday really bringing us the most exciting part of next week, if you will. But it is a big week for earnings. All right. So, again, very big week for earnings. So, very excited about this week. But as I said, I wanted to start this quarter off a little bit differently. Instead of me trading all of these exciting earnings with you, I'm going to create blueprints if you want them for the names. And you guys know I love to use that strategy where we buy debit spreads around supply and demand zones going into earnings, and they can be very profitable. But I'm going to try not to have these type of trades on because, again, we're starting that challenge. So we really want to start from a nice, fresh, clean look, keep you guys all focused on our challenge, okay? But again, if there's anything in here that you want to see this week, just say, "Hey, John, Melissa, can I get a blueprint of that particular name?" And I'll be happy to do that. So again, super exciting here. If you look on Monday, there's not a whole lot going on here that I'm interested in, but Tuesday starts to get interesting, right? We got Tesla, we got Visa, UPS, GE, Pepsi, Texas Instruments, Lockheed Martin. Moving on down here, Spotify. This thing's been on fire. Check out Spotify. This is definitely something I would be interested in coming into this earnings report. And then Wednesday, I mean, some of these names like Tesla and Boeing, you just have to think like maybe they get a bounce, like, right? Meta, one of my favorite things to trade around earnings because, man, can you see some amazing percentage gains? IBM, let's see if they continue to move in the direction that I think they may be moving. And then NOW, which is now. And then moving on over here to Thursday, we have Microsoft, Google, Intel, Snap, Roku, Caterpillar. I mean, the list just is beautiful. Absolutely love it. Cannot wait to see some of the results here. Now, I am curious because we've already seen a couple earnings. Are they going to start to basically talk themselves down, right? So Q2 just kind of ends up being the sideways to down cycle, or do some of these big names start to get the bid or the buyers that we've been looking for to continue this beautiful trend that we had since October? Price is king, and again, we'll be teaching and coaching through every morning, right? So every morning, make sure you're up, guys. We get started 30 minutes before the market opens. It's very important for you to listen in, know what we're expecting. That coaching is a really big part of how most of our trading turns out during the day. So I'm going to give you that idea. Are we pushing up? Are we pushing down today? Is it just a choppy day? And those kind of things can really help you out. Moving on, coming into last week's neutral results, great levels again. Remember, if you don't know how to trade the neutral process, then please watch the quick video on my YouTube page. The neutral, you can see it broke down. It gave you the reason to go short this week. We moved all the way down into the demand zone on the SPY, and we broke through the demand zone on the QQQ. Either way, if you took the short because it broke down below neutral, you did really, really well to the downside. So again, congrats if you did that. If you didn't, that's okay too, because guess what? We have new levels for this week. All right, so let's go ahead and check out those new levels just really quick. This is where you'd want to pause the video and throw these on your chart. Notice a couple things I want to talk about is the divergence between the cloud and price. Even if this were on a 5 minute time frame, I would tell you the trajectory of the move down is really sharp on the cues. I am definitely looking for a snapback rally potentially this week, okay? And I'll get further into the details here in a few minutes, but the trajectory down, it's super sharp. We've had some big sell-offs out there in the market and some of our favorite names, and so there is potential for a bounce this week. Again, price is king. We'll take it day by day, but as far as this chart is concerned, it's definitely looking a little sold off, if you will, and very close into buy structure. Okay, so neutral strategy. The levels here on the SPY 497.36 by 493.41, not bad, about $4 and some change of risk there. And then QQQ 412 by 416, again, not bad at all. And you can see the green zones down below. This is potential. What I'm looking for this week specifically is, yes, a relief rally. If for some reason we sell off again on Monday or tonight when we open up, I'm definitely looking for buyers around T2 and T3. That means target 2 and target 3 below the neutral. Again, doesn't have to be exact, but I am looking for buyers in here if we get the sell off. Also, don't really want to go long until we can break above that 497.36 over here and on the QQQ above 416.86 from the neutral perspective. Again, if you're just trading the neutral strategy, which is built for traders who are not watching every tick. This is for the trader who has, a job, they're in meetings, they're taking kids to wherever they need to take them. They're just busy, but they have a little bit of time to look at the market. This strategy is great, okay? All right, let's go ahead and move on. The next thing that we're going to be looking at here, let's go ahead and pull up right here. And we just went over this chart. Now we're going to jump into trading views. So I'm going to move this out of the way for you. Let's go ahead and minimize this here. And this is our trading view. All right. And this is a quarterly chart of the SPY. Every candle represents a quarter. All right. We have 2 months and 8 days before this candle closes. So everything we talk about, I like to coach from a week to week perspective, but understand like I don't know what this candle is going to look like before that 2 months and 8 days is up. But as of right now, what it is doing, according to my methodology, it's pulled back into the support, which was the 23.6 and 38.2 Fibonacci of using the last 2 quarters. Okay, so I used anchors with Fibonacci's, and I went from here and here. and we pull back into that first level of support. All right. So price brought us back there. Price hit our targets to the upside, and price now has come back. This is very normal. Now, from a weekly standpoint, that was our third week down. We have not had 3 weeks down in a very long time. Matter of fact, it's been, it was prior to October. So again, I think it's well deserved. It's okay that it's pulling back, and I also think, guess what? It's awesome because we got the 3 weeks back. We're about to start our challenge soon. It's gonna be perfect. 421, my quick, notes, 3 weeks down and into quarter Fibonacci support. Price is also at a weekly demand zone. And yeah, I know you can't see that because it's a quarterly, but it's at a weekly demand zone. The bottom of that demand is 490. So there's still potential, for a little bit of a move down. It's still 495. So that's about $5. And resistance now is 500 to 505. And what I'm doing is playing off of the relief rally. So if we get the relief rally that I'm looking for, just be careful between 400 and 405, where we could, 500 to 505. And if we get up in there, just look for a little bit of resistance. Okay. Let's go ahead and move on. We're going to look at the Qs. And same thing here. Not much has changed from here either. We have so far opposite of a bounce because last week I was looking for a potential bounce as well. And we did get it. All right. So last week I said look for anywhere from a 1 to 2 day rally. And we got that on Wednesday. It started looking decent. And then we just sold off as soon as we hit some resistance up above. But we did get what I was looking for. Now I'm looking for something a little bit stronger. And again, it's coming in the form of pulling back on the quarterly into the 23 and 38.2. At this point, it really is sort of in a dead space. We're between two major Fibonacci levels. And because of that, I think there's still going to be some volatility in the market coming into this week. Okay. And again, big players are getting ready to report. If things don't shake out to the upside, that leaves us a lot of room to come down potentially into 407 all the way down into about 380. Okay. So just know that. But again, day by day, all right, we'll be coaching here in the morning. So please make sure that you are bright eyed and ready to go on that. Next thing I want to show you is going to be the dollar DXY. All right. And the DXY from a weekly standpoint, this is what I was saying last week, and I didn't show you guys this. As far as the inside and up formation, this thing looks super strong. It looks like the dollar could be very strong, but I want to coach it from a weekly perspective. So we're going to change this from a quarterly, jump into a weekly. And our goal was to hit the 88.7. And then I said, hey, we're hitting the 88.7. I'm expecting that relief rally 1 to 2 days. And it was literally like one day. It felt good for a day, like really like a half a day for the Bulls on that Wednesday. But we did reject like I was expecting. And these are, this is how it goes. If we build value over the 88.7, please be cautious. As long as we're staying under it, there is a sign that the market could see a relief rally. Okay. So again, the better or the more that it pulls under, if we pull under 105.56, things start to look way better. If we're staying between the 88.7 and 76.4, just expect more volatility. All right. That brings me to the 10-year Treasury, TNX. Same thing. We're in that supply zone. Same thing I said last week. We see a topping wick. That's a good sign. I want it to calm itself down. I'd rather see under 4.5, but if for some reason we take out the high, we're going to head up here towards 4.8. And again, the market's going to look really ugly. Moving on down, let's get into our the skew. Okay, so skew is going to be really important for this week because guess what? We made it to the point that I was talking about us getting to, and I made this new annotation, if you will, right here where it says buy calls 5 to 10 days out. So again, going back 1 year, we have stayed in this area, and every time we've come down here, it's felt exactly the same. Like the market is at this crucial level where things could get really ugly, and then it comes back and it surprises us and it pushes to the top. And guess what? The market just keeps trending to the upside. Will things change? I can only tell you if we start to close under here for 2 full weeks. And by then, it's probably, at that point, you already get the understanding that we are headed down here into the extreme level, which means extreme fear and that max participants are on the put side. Right now, what this tells me with the skew right at this 133 level is every single time it's come back here for a year, we have found the SPY, the Qs, and so forth to move to the upside again. So no reason for me not to believe we cannot get a relief rally because why? Because I'm just using past structure and or history from these levels. Okay, please understand that. Now I will say once again that I have a little friendly bet going here in the room that we would see the extreme levels this Q. So there is the potential of that. All right, just understand that I am open minded to anything happening. My portfolio I've really sized down again, one because of the challenge, but two because Q2 on my radar was not going to be fun. And I didn't think the market was that easy this year. So if you didn't think it was that easy then what do you think now? Because I'm hearing a lot of people out there, things are starting to change, things are starting to develop, and there's a lot of noise out there, and it's real easy for you to get shaken out right now. So again, smaller positions, wider risk, a lot of volatility in the market, but we could see a relief rally. Boom, line in the sands right here this week on the SKEW or the skew. Moving on down here, let's go to the fear and greed index. Okay, so come over here, come in here. You're going to notice, bam, we are at 31. Holy crap. We've come down 15 points. We're now in the fear level. It's about time. I mean, seriously, it's about time. But this is actually, and I always tell everybody this. This is my favorite part of the market. Why? Because I love fear. I like to buy fear. I like to put myself out there, right? And put myself at levels where a lot of people are finally starting to buy puts. They're starting to get super fearful. And then guess what? When the market or the majority of participants are on the put side, and I'm not saying it has to be this week, but just listen. It doesn't have to be this week, but once this starts building up, then they like to pull the rug and well, I shouldn't say pull the rug. Then they rip it like they have been from these skew levels, and then all of a sudden, as soon as everybody got super bearish, we're right back at these bullish levels, and you're like, holy crap, man! Like it's really difficult, right? It is very difficult. And disclaimer, just because things are fearful and extreme fear doesn't mean the market has to bounce. What I'm trying to show you is that a lot of things are coming into those levels where we would look for a relief rally. Everybody's getting, fearful. They're starting to buy more puts. The dollar is still rejecting at the 88.7. The TNX, the 10-year treasury, has a topping wick on it. So all of these things are pointing towards potential relief rally. And then off of that, I've shown you the SPY and the QQQ. All right. And the fact that we're coming into earnings. So you got all this stuff weighing on you. There's so many factors, but price is king. Let's dip into the ES futures. So ESM24 is what I'm using here. We're going to go to a weekly. We're going to talk this through. This really is my baby. This is what we start off, if you're wondering, every single morning in the trendy room here at Simpler Trading. We start with the ES and Nasdaq, and we have a blueprint, and you guys have seen the consistency, especially if you're here in the room or if you're out there on Twitter and you've been following me for a very long time. I don't think anybody else does it better. We have a very mechanical process, and I coach it very, very well. Now, what I'm going to do with you right now is start with a weekly and then work down on different time frames and just kind of talk it through with you, okay? Now, please understand that M24, the reason why I use this particular one and not just ES futures is because I like the structure back when we had the rollover, okay? Now, I can change it in the future, or if you want to just use the ES to see more structure from the past, then you can do that. This is only going to show us so much time. But we can see from here that the market's been very bullish since October. And, during this entire time, the market only had at most 2 weeks of a pullback. So this is a different look for the market. And, if you're in charge of the market, then you know that this is going to throw a lot of people off. 3 weeks down, it did come into an inside enough formation. That inside enough formation comes in the form of looking like this structure right here. This is the initial candle, this is the inside candle, and this is the up candle, and here we are now. So again, we've come back to that level And now we want to see, all right, now we want to see if this level can hold. So far as the weekly is concerned, it did come into my buy zone. It's still in the structure. It has not closed under. If it starts to close under, then this 49.80 becomes resistance, and I would be careful, and I would be looking for prices to continue to move down, potentially into 49.20, and then down here into 48.70. Okay. But again, weekly perspective, we got to wait for the week to close. We will then coach every single day, though, on smaller time frames. This is the daily look, and this daily look comes with trigger longs and trigger shorts and resistance and so forth. Now, I use this by finding Fibonacci, supply and demand, using existing levels. You can see there's an edge here, there's an edge here. Far as trigger longs, I'm saying are here at 4991. 490 or 4900 and 4809. Okay. Now I have 3 on here this week just in case we have a volatile move down. My last place where I would want to try and get in is right here. Remember, I'm using smaller time frames to enter here. If I choose to enter here, I'm using a smaller time frame and I'm using trendy turn signals. Okay. Now, resistance, same thing. I just want you to be aware where it is on the chart. And then up here on the trigger short doesn't necessarily mean we'll go short. It just means I'm looking for specific things here on the shorter time frame to get short on. Okay. As of right now, you can see the banners up here. This is really important that it's been bearish. We know that over the last couple weeks, but the yearly is still very extremely bullish. So it makes a lot of us want to buy the dip. So we're going to try at certain levels. And if it doesn't work, that's okay. Smaller allocation, wider stops during volatile times in the market and or times of uncertainty where you're like, well, yeah, I've always been taught to buy the dip, but I'm not sure it's going to work. Like we can't be 100%. And anyone that says that is just full of you know what. Let's go ahead and move on to the smaller time frame. All right, so this is coming into it shows 6 hour, all right, and typically I would show you guys a 4 hour. You can see that we have 6 hour zones in here, which are really nice. So just note that on Friday, we came very close to that zone. So there is more room for us to dip maybe tonight or tomorrow and find some love in there. When I look closer and I zoom in, you can see, right, we have some force buyers in here, and this could serve as a relief rally. Far as clouds are concerned, if you want to use the 4 hour or the 6 hour, this is really important. So this is the 6. Notice how well that cloud's been working to short every single time we come up here. And if you follow me on Twitter, then you know what I said on Friday. Could potential relief rally, but short the lower time frame clouds. So again, 6 hour. Let's check out the 4 hour really fast. All right, and now we have the 4 hour, and you can see here that the cloud has been resistance until proven otherwise. Same thing. All right. So why use the cloud as resistance? Because they're exponential moving averages and they really help us stay in a trend. So in this case, the trend for the last couple of weeks is down, and it's not going to look better until bulls. If you want, I want you to think about a tier system. I need you to go through the clouds from a lower time frame to a higher time frame. So for example, if we were to come to let's go over here to a 30-minute time frame, then you could have a goal. Hey, I'm not going to be bullish. I'm going to be, very good. I'm going to mind my patience. I'm not going to get FOMO. So if we get that balance, maybe you have a rule that says I'm not really interested at all until at least the 30-minute can get above the cloud. All right. And then when the 30-minute gets above the cloud and buyers are coming in and things are looking great and you feel a lot better, then you can up that and go, okay, let's see how close we are to getting over the hour. Now, one of my biggest loves of the time frames, I guess you could say, is a 4 hour. The 4 hour really, and I've said this so many times, if we come over here and look at I don't know, let's do 180 days. Once the 4 hour gets over the cloud, things start to look a lot better far as like trend is concerned and trying to ride a really big wave. So if we cannot do that, you need to be cautious for the time being. Just like when we close under the cloud, then things start to, boom, 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 they keep breaking down. Okay. So again, 4 hours my favorite, but if you want to get into a tier where you're not waiting for a 4 hour and you want to jump on a trend, you could do a 15-minute, a 30-minute, a 1 hour. You can work yourself up. Now, the only way that I'm looking for a relief bounce is if we're coming into demand, and you guys can see that we are coming into some demand, and I've shown you that on a couple charts today. Let's go over into the Nasdaq. Let's go to the higher time frame. Let's see what's happened so far. We broke the channel. This has been the top. I can't believe, we kind of basically called that since the beginning. It never even got over the line. This was a future trendy edge. That future trendy edge worked really well. We broke the channel this past week, which is really a sort of ugly look, but it did come into an inside enough formation. And this was your trendy buy zone last week on the Nasdaq. So we did make it here. And again, just like the ES, this zone is this wide. So we could continue down, but just understand that anytime you're in a bull or buy zone like this, that bounce can come out of nowhere, just like that. So if you're short, which I have nothing against, guys, we're just all here to make money. I don't give a damn if you're short, if you're long, it doesn't matter. But the levels are the levels. And if you're short, what I would tell you is just be cautious if we start to relief rally out of this zone and all of a sudden we're holding above this level here on the Nasdaq, because there is a good potential that you could see a nice little relief bounce all the way up to, I don't know, 30 to 40% of this move down. Okay. Moving on, this is the daily. I kept a lot of notes on here because I like this chart. It's kind of gives you a lot of detail. Like, for example, right here, I've mentioned this probably about a month ago, if not longer. I said, listen, this is the stronger move. And I put these notes in here. Although this is an inside and up, you have to ask yourself if this looks like a strong move out. This was your hint to let you know that, hey, just because price was coming down here, and I know we discussed this note has been in here for a long time. If price comes here, even though it's a zone, that's not my favorite zone. This is my favorite zone. And guess where the Nasdaq closed on Friday? At my favorite zone. So all I'm doing is I'm looking at the stronger moves out. I'm comparing it to this, and this looks stronger to me, and therefore price has come back to that level. ES came into a level. Nasdaq is at my level. The DXY is rejecting 88.7, the dollar. The TNX 10-year Treasury, again, topping wick, showing some rejection here and some supply. Then we have the skew. We know that participants are now jumping on the put side. They're all, drinking the Kool-Aid, if you will, down here in a demand zone. And what else? Fear and greed is at fear. So it's like a perfect combination. Timing is the variable. All right. So I could be wrong on the open tonight or something like that, but I am, and my overall sentiment going into this week is I am looking for more of a relief bounce. So again, I said last week, 1 to 2 days, we got about a day of, half a day of relief, and then things just kind of broke down again. Okay. Now I want to talk about that since we're here. The Nasdaq. When I talk about the relief, you're looking at Monday, Tuesday, Wednesday, Thursday, and Friday. So here you can see that cloud, right? We bounced into that cloud on Monday. Things were looking pretty good. Tuesday, we had the inside candle. Then Wednesday, we go inside and down. We get a sell signal actually on Wednesday. And then Thursday and Friday, more of that steep move down. Trajectory is really sharp. If we go back and we study the market, you guys could do that. This is pretty uncommon this year, right? With this many down days, there's not a whole lot out there far as, well, I'll just put it at this. It's a great opportunity in my book. I just need to be patient. I need to have a process. I need to have a plan, and I want to stick to it. All right. Again, guys, I can't wait to see you this week. I can't wait to trade with you. Melissa and I are really pumped to see you on Wednesday night, but also every single day in the Trendy Trading Room. Talk to you soon.